Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo.
Hey, good afternoon. This is Dennis Wilborn coming to you for the How to Make Money Trading Stocks, Options, and ETFs. So I want to welcome everybody who's joining us via either Facebook and or our YouTube channel. And as always, hey, feel free to share this video with anyone you choose to. Invite them to come in, take advantage of some of the opportunities that we offer with Active Trend Trading. And if they just want to get some good trading ideas, we do this free once a week, this webinar. And do me a favor, at the bottom of the page on either YouTube and or Facebook, give us a nice thumbs up. And now we'll get into the session right now. As I said earlier, I'm going to mute I'm going to turn my screen off. As I said earlier, I had to go old school today with the headset and the mic. We've had a very busy day today for active trend traders. And I want to welcome everybody. This is How to Make Money Trading Stocks, Options, and ETFs. Those are the areas we focus on for the active trend trading system. Want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. A little bit of administrative stuff. If you do want to make a comment or ask a question, please use the chat the chat area. Then you can just leave me a question, leave me an answer, and I check that occasionally just to make sure that I'm not forgetting anything. So remember, your job as a trader is to wait for the best possible opportunities. Money is made stalking and sitting, not being active and forcing a new trade each and every day, or sometimes each and every week. We want to basically, yes, we want to be nimble, but at the same time, we don't want to just jump out there and trade just to be trading. There are specific reasons, and that's why the active trend trading system is a rules-based mechanical system. How is that a benefit to persons who's learning how to trade? It helps us basically manage our emotions and our compulsion to do something. And so if you learn the rules and basically then practice the rules, it helps, one, protect your capital, and also gives you a better opportunity for your funds to grow. I want to jump in very quickly. The objective of today's session is to basically the objective is timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions so wealth can be multiplied. The question is, right now we're looking at, do we trade this pullback or do we not trade this pullback? The market basically has been kind of selling off since the Fed meeting and since President Trump came out and tweeted that he's going to hammer the Chinese with tariffs, bam, the market's been selling off through the rest of the week. Here's where we're sitting as of today. We're are back over 109,000, so we're up 9% for the year so far. The S&P, again, up for the year nicely, however, down from all-time highs. As you can see, the Russell trying to slip away. What I want to do today when we get to the charts is I want to take a look at past topping, our last topping incident that happened back in October of last year. What are the similarities between that and what we're seeing work its way out in the market right this moment in time? So we'll take a real quick look at that. I'm keeping an eyeball on what's going on here. And so let's get over to the charts and just take a look at that specific aspect. I'll look at shoot. There we go. Okay, let's look at both there's good things and bad things about the specifics of today's market. Here's the picture of the SPYs. The spiders basically have come up. They hit an all-time high on the 1st of May, and then basically kind of started bouncing around. This picture here of the 8 and the 20 crossing right here on a daily chart is typically looked at as a bearish signal. What do we anticipate happening at this point? Well, we anticipate price action moving back up, as it looks like it's doing right now, back up into that resistance zone. Okay, we have a nice little initiation of a trend going down. We have a lower high, lower low. Now we have another lower low. So for the immediate future, the S&P is in fact in a downtrend. Now, could it reverse up after as we saw, the market's been reacting fairly violently to the downside based on the potential of having the tariffs go in effect on Chinese goods. Well, that could in fact push us down even further. But so that's kind of the positive. The negative. The positive of it is we're getting a nice reversal candle, a nice big hammer that's also almost engulfing yesterday's move. TSI has not turned back up yet, so we may be staging at least a temporary, I found my bottom, now I'm going to go back up here. The telltale sign will be is what happens when price action moves back up and retests. So this rally back up into, will it make it up to its old high, or will it run out of gas? And I'm guessing somewhere about the 290 level. Will it run out of gas there, turn over, and fall from the sky? As I said, let's take a look at what was things looking like at, and I'll be looking at this little box over here. Let me put a box around that. What did the past, there we go. What did the past top look like? Okay, let's get that applied. So I'll just hone in on this area right here. This is when we topped in October of last year. What does this look like? Oops. There we go. Okay, now what I'll do is I've highlighted that area here on the weekly chart, because we see things turned over, TSI crossed back down to the downside, momentum started falling out on the market forecast. It looks very similar to what we've been seeing over the last 2 weeks. What has happened over the last 2 weeks? On the S&P, we see we had a hanging man last week. That's a bearish reversal candlestick. Then we get a sell-off this week, this is a very wide range. That's another clue that basically the market could be in for some additional weakness, is when we roll over and the ranges start to increase. As we see, ever since the move up from the day after Christmas last year, the weekly moves have been fairly significant, fairly large, but then I started slowing down here over the last little bit. As we see, a little bit lower ranges, and then all of a sudden we get this is the largest down week so far that we've had and seen so far in the markets themselves. And I apologize for having issues with my mouse. So let's move on over here to the left here. Let's go on over to where, let's take a look at this on a daily chart to see how things, going over to October of last year on a daily chart. There we go. As we can see, we started getting a similar type situation on the daily chart. The TSI, as you can see here, starts to show negative divergence until we come up, it made a new high, but the divergence on the TSI was negative. That oftentimes means a new high made on waning momentum is typically a sign that, hey, we could be in for a bigger, or for a move down to the downside. Then we have a rally attempt. About 2 weeks later, it pushes up, fails to make a new high, and then rolls over. We get the 8 and 20 moving average crossover, and from there, basically price action would push back up into the moving averages, either the 820 or the 50, and then roll over for a nice deposit down to the downside from there. So, and as we saw, it went on for, oh gosh, through December up until the day after Christmas, when it finally hit its absolute low. But we had a really nice sell-off. It was basically in a bear market territory as we pushed off. So what are we seeing take place in the market right now? Let's take a look. We've already started to chew our way down to the downside. And as I said here we're moving back up, but we have a negative crossover. So that's one area where this pullback is different than the past pullbacks. This pullback has lasted longer than the previous pullbacks as we were working our way up from the lows in December of last year, because we get like anywhere from 2 to 4 days worth of down, hit the moving average, break back up. Now we're struggling to maintain the moving averages. We drop back below this 285.18 area. We could be in for a larger fall. However, we may get a test right up here in the 288 to 290 level is where I would just keep my eye peeled for a test into that area. And that would potentially give us a, get out of there. Remove that drawing. There we go. Yeah, I'll move back up into this area. Again, the moving averages are turning over, and that's a negative sign. We're hammering down. We've hammered down the 50-day moving average. Again, TSI looks like it may getting ready to bounce back up. So yes, it is approaching oversold extreme. Approaching it, hasn't made it yet. But the TSI, the price action is extended away from the 20, but not to an extreme level. So we'll sit there and we'll just watch this. I will look to, if we get a retest back down in the, here's the way I would look to trade this. If we get a retest back down into the, about 282 to the bottom there of that candle, which is right at 282, somewhere around 282, 282.50, that's where we could plan a trade to the upside from there. But what would our upside target be? Moving back up to the 820 moving average, or even the 34 moving average, and say that's where we'll go ahead and plan to take some profit off the table. So that's what we've got with the SPYs. And I just wanted to, like I said, highlight that here was the past high, where we rolled over. We fell over 20% then. Where would a 10% correction, which would be healthy for the market, where would 10% take us on this journey? Well, we can basically just go here. Let me switch this off to a line and click on it right there. And just start pointing that down to, and I think this line that's right here, I think there already is at the, right there is about 10%. So the 265 area would be a 10% correction. That would be a healthy correction. Let's get rid of that really quick. What kind of a pullback would that be on a Fibonacci on the same levels? Great question. Go here, click, go up here, and click in at the top there. And as you can see, that 10% correction will put us right down into the midsection or the gut of the Fibonacci. And that is that's the area where Charles Dow discovered somewhere between a 1/3 to 2/3 correction or pullback was natural and was healthy for the market. And sure enough, isn't it interesting that a pullback of 10% puts us right in the midsection of the Fibonacci for this particular entity for the S&P. Go over and so that's basically what I wanted to cover with it. What I'm going to be looking at this weekend is basically I'll be assessing, okay, where are we going to get our bounce? So do we want to be short the market or long the market? Again, I will look to go short the market once I get up into these moving averages, or I will look to go long the market if this support at 282 holds. Let's take a look at the Qs. There we go. Again, something similar here going on in the Qs. Price action has, in fact, getting a very similar type of move. Qs looking a little bit weaker than the S&P. Again, looking for a move. If we come back and we retest down at the 181 area, that would be a potential to get long. However, my TSI has not pulled back up yet. It is not 100% extremely oversold. So we may get a bounce up in here. If we fail right at about the 820 combo, which is now crossed over on the Qs and the NASDAQ also, that would be an area where we look to basically get short or buy into an entity such as SQQ, which is the 3-time leverage ETF to the upside. As we can see, I'll be paying attention to that because on this one, it's a pullback down here to about $9. If we pull back down to around $9, right there, $9.20, $9.18, that might give an opportunity to get long on SQQ, or we actually may get back and retest down at the 8.5 area. I doubt it because $9, that's where it corresponds to what's going on with the Qs themselves. And what about our buddy IWM? IWM is actually looking a little bit, I won't say healthier, but at least a little bit more controlled. As you can see, we found support at this moving average here. I believe that's the 200 or the 100. Let's see. That is the 100. The 100 is still below the 200. So as we see over here, the Russell did not make as much progress in getting back to last year's high. So that kind of puts it doesn't mean it's neither bad nor good. It just means the momentum wasn't behind the small cap stocks. Which you can anticipate because of, one, the level of interchange, and it could get whacked with the lack of a Chinese, China deal also. So I'm looking at where's my potential on IWM. Any type of a retest back into the wick of today's candlestick would provide us an opportunity to get long something like this. TSI has not sold off much. However, weekly charts, we're looking at on the weekly charts, TSI has in fact rolled over, negative divergence, and so if we break that 200-day line or 100-day line, and back below the 200, back below the 50, and we drop that 153 level, look for a pullback down into the 150 or around 148. If we go into a pullback, I'll be looking at trading either one of these two, TNA to the upside. A lot of indecision there today. And then TZA to the downside if it gives us the opportunity. Now again, I will look to go to the extremes. In other words, I want to trade TZA, but it would be down here at about $9, you know, $9.87, somewhere around there. So the last thing I'll leave you with today is keep your eye. Here's a potential. We traded this on earnings this week. Didn't turn out exactly the way I would like it to turn out. However, we did get a really strong breakout on Roku. Huge buying volume. And so watch for this, give us a nice setup over the next, I would say, 5 to 10 days on a pullback down to between 77.57 and 74.35. If it pulls back into that particular zone, I would say Roku would be a buy, and I would put my stop loss would be 4 to 5% below that level. So let's run back over and finish off the slides. Again, hey, we've been really focusing on the strategy 2 this year, rolling it into a strategic compounding effort. This was, you know, I'm not sure this is where we're going to wind up at the end of the day, but we are tracking. We're up over 60% in this strategy for the year. Took a hit today, this week, due to the earnings trades on Roku and TTD. However, we've got some replacement trades that are already in place that are working to provide us our upside, looking to target $814 for next week. That's our 5% target to continue on track to move on down to, basically we're targeting 5% per week on this. NASDAQ, I'll just show you what month we're in and what the anticipation. Both Russell's, NASDAQ kind of moves sideways in May. Natural gas, we'll look for a potential bid to the upside on natural gas moving forward. And then gold tends to move a little bit sideways through the end of July and then roll into a movement after that. May tends to be sideways to slightly up on crude oil. We'll look to for what's going to happen on that. Tomorrow we've got the BAM webinar, which is our Bay Area Moneymakers meeting, the 11th, and we're going to be basically showing people how to trade less and make more. If you're interested in that, you can send me an email, or you can just go to BayAreaMoneymakers.com, and it'll show you how to sign up to attend the webinar. If you're looking to get a hold of me, drop me a line. Here's my email. And of course, I'm working now with my son, Brandon, who's joined the active trend trading team. And there's my wife here, Michelle, and then our son, his wife, Sharon, and our 2 grandkids who basically just left on Tuesday this week. Hey, I'm having a spring special on memberships for folks who want to join and take advantage of all 3 of the strategies that we do utilize. It's a 40% savings off our regular price of $124.99. And I wish there we go. You can get it for $74.99, or you can try it for a quarterly option. You'll save $175, $199 per quarter. Go to this website for the to sign up. Has a password protect, save, all caps, SAVE. When the recording of this comes back out later this afternoon, you can go ahead and jump on that. If you're interested in joining us, there's no obligations. It's a monthly service. And so give it a try for a month. If you don't like it, hey, that's, great. But, I just want to provide folks an opportunity to increase their capital and grow their nest egg. And we're really seeing that happen with our strategy number 2. So, hey, 2019, a year of completion. And for premium members, we'll be right back at straight up 12 noon for the final hour. We'll go over the trades that we just did that are up nicely, that we just did earlier this morning. And so, but until next week, aloha, trade well, and prosper. God bless everybody.